So we are talking about November 2020 compared to 2019. And the market continues to be extremely hot indeed. I've said this over the last couple of months. It's the hottest market I've ever seen, without a shadow of a doubt. I've been selling myself. I've been selling for 13 years, and I've been investing for 22 years. And I see comments coming from other real estate agents and other investors who've been in the market much longer than I have, even up to 40 or 50 years, saying they have never seen a market as hot as this. So this really is quite extraordinary. And in fact, the number of sales that took place in November, according to the Real Estate Institute, so that is the number of unconditional contracts. It's not the number of settlements, it's the number of actual sales made according to sale and purchase agreements, not settlements. That was the highest number for 1 month since 2007, and the largest number of sales to take place in the month of November, since 2006. Not a great deal of difference between 2006 and 2007. That is because November is typically one of the two biggest months for sales in the year, the other biggest month typically being February. So yeah, the largest number of sales, highest sale volume in a month in 13 years. So it really has been very hot. And that is in the face, of course, of low supply. So how can you have low supply and yet highest number of sales in a month? That just goes to show how hot the market is and how hard buyers are fighting. So let's carry on. To start off with, the median sale price up to November here. So if you haven't seen these slides before, the blue graph shows you the monthly figures, and the red line shows the 6-month moving average. And so very, very interesting. You can see here, November 2019 was 690, November 2020, 790, so that's 15% growth. But what's more interesting to me is to see this pattern. You can see over the last 2, 4, 7 months, there has just been a constant and a clear trend there that the price has been going up significantly. So after COVID hit, we actually did see prices come back a bit, but since then prices have grown significantly, strongly and consistently. So yeah, there's no question that price growth continues to be strong in Wellington. Just let someone else in. So if you just joined us, welcome. Feel free to jump in anytime with questions or comments. So I'm happy to sort of field discussions and questions. Just unmute yourself. I've muted everyone, but just unmute yourself, and we're good to go. So how many properties are coming to the market each month? And this is interesting because all the time we hear from buyers saying that there's no supply, there's no properties to choose from out there. And if you look at the actual number of properties on Trade Me, that is correct. The number of Trade Me listings is very low. But I think what is more interesting to a buyer in the marketplace is how many new listings are coming on each week or each month. And as you can see from this data, the red line shows only a gradual reduction in the number of new listings each month over time. So it's not actually true that there's no properties to choose from. The number of listings coming on each year has, yes, it has reduced, but not by a vast amount. So we're sort of talking 20% reduction in new listings compared to, say, 5 or 6 years ago. And I don't think that if you spoke to buyers and asked them, what sort of reduction in supply are you seeing compared to 5 years ago, I don't think people would say 10 or 20% reduction. They'd say 50% or some huge number. But the stats don't lie. we have seen a reduction in the number of new stock coming to the market, the properties that are coming on for people to purchase, and indeed those to the buyers are the interesting ones. The ones that have been sitting around for months, they're not nearly as interesting, I'm sure you'll agree. And we have seen, again, over the last few months, since COVID, which is over here, the supply coming to the market quickly reverted back to pre-COVID norms. And the last couple of months in particular have been very strong. So in actual fact, as you can see from these numbers, November 2020, 757 listings compared to 684 in November 2019. So compared to 12 months ago, now I've said they're down 10%. My apologies, that is an error. Quite obviously, it's approximately up 10%. That is counter to what most people out there who are looking would say. They think, no, stock is down. Well, actually, it's up. The new listings in November was significantly up compared to November 2019. And again, the blue chart showing the monthly results and the red line showing 6 monthly. So you can see over the last few months, the 6 monthly average has actually increased above over 600 for the first time in 6 months or so. It hasn't often been below 600, but it has been over the last 12 months a number of times. But we're certainly returning upwards into positive territory. Obviously, we're now in December, and so we'll see the number of new listings fall back again. But that's typical seasonal situation. In December, you get very few listings coming to the market. So an increase in the number of new listings. So you can see there that actually the number of new listings in November was a very strong result indeed. We haven't seen that many new listings coming to the market in a month, since right back here, which is sort of something like 18, 20, something like that months ago. So yeah, very strong in terms of a monthly result for new listings coming to the market. And how many sales have taken place? So we've seen an uptick in the number of new listings coming on. We've also seen an uptick in the number of sales. So similarly, you look at November 2020, 859 sales, 808 in November 2019. So this shows continuing strong demand, increased demand compared to last November. And the fact that it's increased from last November, perhaps that's slightly something to do with the fact we had more new listings come on, so there were more available to purchase. And again, you can see the last 6 months or so since COVID, obviously this is the number of new listings coming on in April. No one's bringing properties on during lockdown. Since then, we have seen very strong results and very consistently strong number of sales taking place very quickly after lockdown was lifted. And indeed, again, you can see this 6 month moving average for the first time in probably about coming up to what be 4 years, 4.5 years, we're heading for 800 sales on average a month in the last 6 months for the first time in quite a few years. So again, that just shows a very, very strong result indeed. From the heat of the boom market as we came into 2016, which is these numbers here, we saw sales volumes increasing. Since then, it has been slowly decreasing and then leveling off. COVID saw a reduction, and then we've seen it bounce right back up again and heading back, as I say, towards that average of 800 per month for the first time in quite a few years. Again, just more signals that this is a very strong demand out there indeed. So, plenty of demand, a strong market in the Wellington region, as it is in the rest of the country. And there's an interesting fact for you. As I mentioned before, we saw in November, you can see a very strong number of sales in November in Wellington. In actual fact, around the rest of the country, the November result was even more pronounced, and it was the largest number of sales we've seen nationwide for a month in 13 entire years. What you're seeing in this data here in this graph is about 6 years worth of data. So if we were looking at the whole New Zealand data, this chart here, this result here for November would be a higher graph up here than anything else for 13 years in the past. So really very, very, very strong result. lots and lots of demand out there, lots and lots of sales taking place around the country. How long is it taking to sell? So with all that background, it's no surprise that the duration to sell is short. So it's been hovering around these levels for some time now, as you can see, with one or two exceptions. This, of course, was coming out of lockdown. Lockdown stopped us from selling, so the number of days it took to sell increased by, a factor of 2, sort of 30 days or thereabouts, for the month that we were in lockdown. Other than that, it's continued to be sort of in the high 20s. And as you can see from the last 6 years or so, it doesn't get a lot shorter than that. Right back here in 2016, early 2017, we saw numbers around the 25. But other than that, it's been very rarely is it down below sort of what we've seen in November, which is 28 days, and compared to 29 days in November 2019. So pretty similar, just down by 1 day or 3% in terms of how long is it taking to sell. So that's a strong result again. It doesn't take long to sell property in Wellington, again, or indeed the rest of the country. And this again is reflected in the inventory. So this is how many weeks worth of supply have we seen on the market in the month of November. So in other words, how many weeks would it take to sell every listing that's on the websites if no more stock came to the market and everything continued to sell at the same rate each week? How long would it take to get to zero? And the answer is 6 weeks in November 2020 versus 7 weeks in November 2019. 7 weeks, still very short on supply, very low inventory levels. 6 weeks, of course, even less. And the long-term average for Wellington is 16. So it goes to show that compared to what's normal, we are extremely undersupplied in the market. And interesting, you can see for the last 4 months, so November, October, September, and August, we're seeing the consistent result. So 6 weeks worth of supply for the last 4 months rather. And if you look for in the past, when have we last seen such consistently low supply over a period of time? We have to go back to here, which is back about 5 years before we see at six weeks worth of inventory or less for sort of 4 months in a row. And you can see that the inventory levels were slowly creeping up on average over time as per that red graph there, and then we've seen it drop right back down sharply since lockdown and sort of since we established new market norms coming out of lockdown there. So very, very short on inventory levels. And similarly, this is showing in the number of Trade Me listings. So this is the gross listing volumes on the website. All the other numbers relate to November. This, of course, is in real time. So this was the numbers as at yesterday, I think it was, I collected this data. So December 2020, 1,035 versus 1,097 in 2019. So the new listings come to the market, and then the sales take listings off the market, and on balance in the last 12 months, we are down 6%. And so what that says is that more sales have taken place in the last 12 months since December 2019 than listings have come on to the market. Or indeed, I suppose there'll be listings that just got removed that didn't sell, but those ones are pretty few and far between in this market. So again, if you look at the graph, the numbers there, you can see clearly volumes coming down there with an increase in October. And so this is the spring kind of rush, if you like. A bunch of people bring their properties to the market in spring. We did see that happening rather late this year. Normally it would start, the volumes of listings would start increasing in September, or not often as late as October, but this year it didn't happen until October. And perhaps that was people waiting for the election to move out of the way. I'm really not sure, but there was a very, very late spring rush indeed in November. And now in December, of course, we've seen the number drop off significantly again. So that's about a 20% reduction over the last 1 month. And that's just indicative of the fact that very few people are now bringing new listings to the market. I mean, in our company, we have had significant number of new listings last Tuesday, none today, of course, but even as late as a week ago, I think we brought like 25 properties to the market last week, which for this late in December is really, really unusual. Most people by now have pulled their foot right off the gas in terms of bringing listings on. But certainly we have still seen properties selling much faster over the last month than new listings have been coming on, and that's reflected there in that difference in the number of new listings on Trade Me, moving down to just over 1,000 from kind of sort of 1,300 or so in the Wellington region last month. Again, that red line paints a pretty bleak picture for those buyers in the market who are looking for homes at the moment. 6 years ago, we were seeing, well over 3,000 listings on Trade Me in Wellington. When the boom started, that stock was absorbed very quickly as demand soaked it all up. And then we hit sort of a plateau where it was fairly stable for a number of years, new supply and sales taking place at roughly the same amount, at the same rate, until about 18 months ago when it slowly started coming down, and it really is at very low levels here indeed. As you can see here, the lowest levels we've seen for some time. So that December result at 1,035, as you can see from the graph there, we've never been that low, at least not since I've been collecting this data over the last 6 years or so. So yeah, this is not happy news for buyers out there. But as I say, it's not because number of new listings coming on is 50% what it used to be. It's the number of new listings, yes, is down a little bit, but the rate that they're selling is outstripping the number that are coming onto the market. So the gross levels of supply obviously then come down.
Adam, it's Pip here.
Yeah.
I saw today that the ANZ has increased its LVR for investors. Do you think that might have an impact by perhaps, meaning there's fewer investors in the market?
That's interesting. I haven't caught up with that news, but it's been on the cards, and I think it was ASB not long ago they sort of indicated they were going to be more strict on LVR requirements, for investors and some other buyers and so on. So what have ANZ? Did you say it was ANZ who've done this?
Yeah, ANZ have gone to 40%.
40%, yeah,
deposit.
And that's a lot, right? So they've gone from 20% to 40%. And there has been some discussion that the Reserve Bank could mandate up to 40%, which is a big step. Is that going to make a big difference? I mean, it won't increase demand, will it? I mean, that's going to be a constraint for some investors. Who's it going to be a constraint for? It's going to be a constraint for new investors, right? People who've been in the game for 10 years. Probably not going to struggle with 40%. Is that fair to say?
Yeah, agree.
Yeah, the other thing is that prices over the last 6 months have increased 10%. So there's another 10% equity just like that.
Yeah.
So that's going to make it easier. So they just, people then have to revalue their properties, and they find that, whilst they had, 3 million worth of assets in April, now they've got 3.4. So they have that little bit of buffer to counteract. So the ANZ are saying we're going to move from 20 to 40, but if you had 20% equity before, now you've got 32.
Yeah.
And so there's still only a gap of 8% to bridge, but and those are the people who were at 20 to start with. And any investors who've been around a while, very few run at 80% debt after they've become reasonably established. People prefer to get a bit of breathing room and have a bit more capacity to absorb shocks and to finance a new roof if they need it out of cash and so on. So will it slow things down? Yes, perhaps it will at the margins. It'll only be at the margins though. So the other thing I suppose is that investors typically make up about one transaction out of 3. At times that might move from 33% to 36 or 38 or even 40, or sometimes it might go down to 30% or 28. But broadly speaking, 1 transaction out of 3. So if out of 100 transactions, 33 of them or thereabouts are investors, how many will be impacted by this change out of 33? If 10% are impacted by that change, then that might have an impact on 3 transactions out of 100. So, if you whittle the numbers down like that, you can see it's not going to impact half the market.
Yeah.
Yeah. So it may have some impact, only at the margin. The other thing it might do, strangely, it might send a message out to everyone: quick, buy now before all the banks do this.
Yeah, true.
So all of a sudden, there's more pressure on prices because people are rushing in to get now. It's a bit like the old immigration effect too. Everyone seems to think, and there's stories from Kiwi expats abroad, that 250,000 Kiwis abroad are saying they want to come home, and so as soon as the borders open, the country is going to be awash with expats coming home. And so the anticipation of that happening is having people buy now before that happens. It may or may not happen, of course, but the expectation that it will happen has prices go up today. And so the same may be with the LVR. And that LVR change has been on the cards for 2 or 3 months kind of now. And so you might have investors and other people out there buying now before they get shut out of the market by this incoming LVR requirement. So strangely, it can accelerate the market now and then potentially slow growth down later when it does come in. But end of the day, don't know. I don't imagine it's going to make a huge difference. I think if interest rates went up, that would be more of a shock than an increase in LVR requirements for investors, because nobody is expecting that, whereas everyone's kind of been expecting LVR increases. So that comes as no terrific surprise.
Yeah, good points. Thank you.
Yeah, so that's my opinion anyway. Yeah. But anyway, yeah, good question. Thanks, Pip.
Thank you.
So yeah, Trade Me listings. I think we've done that. You can clearly see though that's this is certainly the I suppose the result of the market that we've seen over the last 6 months, which has just been eye-wateringly hot. So in summary, price growth is still strong. New listings are up. Sales volumes are up too. Duration to sell is slightly lower than a year ago, but broadly speaking, it's stable at low levels. But stock and inventory levels are exceptionally low, and the market remains really, really strong, really, really competitive, difficult for buyers, great for sellers. Right, guys. Hey, thanks for joining. Have a wonderful, wonderful Christmas. Yeah, gosh, am I going to do one of these in January? I don't know. You'll hear by email. If I'm not on holiday, I'll probably do one. All right, you take care. Have a good Christmas, everyone. Sing out if you need any help.